All right, welcome to Iron Financial. Our mission here is simple. We help you forge a stronger portfolio by stress testing the market's biggest stories. We don't just skim the surface. We take a sledgehammer to a company's financials to see if the structure is solid. Exactly. And today the company we've got on the anvil is BitGo. You've probably heard the buzz. It's the picks and shovels play, the essential infrastructure, the toll booth on the crypto superhighway. But here's the real question we're going to answer. Is BitGo a fortress built of solid steel, or is it just a facade, fool's gold? Let's find out. Okay, let's not waste any time. Let's get right to it. Look at this number on your screen, 424%. And believe me, that's not a typo. You are seeing that correctly. That's BitGo's full-year revenue growth. A number like that just screams one thing. This company is in absolute hyper-growth mode. This is the kind of raw, explosive power that gets Wall Street's heart pounding. It tells you they're grabbing market share so fast, their competitors probably don't even know it hit them. It's pure, undeniable momentum.
Whoa. Hold your horses. Before you declare victory based on one giant, flashy number, let's pump the brakes and look at the whole picture, okay? A 424% revenue jump sounds incredible. I get it. But how on earth do you explain this? In 2024, a tidy profit of over $156 million. A year later, after all that growth, a nearly $15 million loss. That's not just a little stumble. That's driving off a cliff. So you got to ask, what is the real story here? Are they just lighting piles of cash on fire to chase that shiny revenue number? Is this whole thing built on a foundation of sand?
And that, right there, is the billion-dollar question, isn't it? It's the one you should be asking, and it's precisely why we're doing this takedown today. We've got two numbers telling two completely different stories. One says it's a rocket ship, the other says it's a sinking ship. So which is it? You can't just listen to the hype, and you can't just pick one number and ignore the other. That's why we're here. We're going to tear this thing down to the studs, we're going to test every single support beam, and we are going to find out what is actually holding this company together. We'll find out which story is the truth.
So, here's how we're going to break it all down. This is our blueprint. First, we'll explain what BitGo actually is, the crypto toll booth model. Then, we dive right into that central conflict, the revenue rocket versus the profit plunge.
And you better believe I'll be pointing out what I see as some serious cracks in the foundation.
Then we're going deep. We're going into the engine room to find the company's real operational strength. We'll see what Wall Street thinks, and then we'll give you our final Iron Financial verdict. Let's get started. Okay, so first things first, what does BitGo actually do? The easiest way to wrap your head around it is to think of them as the premier arms dealer for the entire crypto industry. See, they're not betting on Bitcoin to win or for Ethereum to take over. They couldn't care less. They're selling the picks and shovels to every single miner in the digital gold rush. They provide the heavy-duty, industrial-grade, high-security infrastructure. Things like custody, trading, staking, all the stuff that big money players, hedge funds, corporations, the big institutions, absolutely demand before they'll even think about putting a dollar into this space.
And look, they are not just some crypto startup playing in a regulatory sandbox. They are methodically and aggressively building a regulatory fortress. Just look at these wins. Getting OCC approval to become a federally chartered trust bank? That is an absolute game changer. That's not some participation trophy. That's a seal of approval from the big leagues of traditional finance. And they followed that up by going public on the New York Stock Exchange. They're expanding globally. They are laying the regulatory steel beams for a business that's built to last. That's all well and good. Building a fortress is great, but a fortress that costs more to guard and maintain than it brings in, well, that's just a really expensive pile of rocks. Are these strategic wins actually translating into durable financial strength?
Perfect question, because that leads us right into the bull case. You want to know if it translates? I'll tell you. That regulatory fortress is being powered by an absolute monster of an engine, and the performance of that engine, for the bulls at least, it all starts with one thing: undeniable, explosive top-line growth. So let's really dig into these numbers.
I mean, just look at this chart. Get your head around the scale of this jump. They went from a little over $3 billion in revenue in 2024 to more than $16 billion in 2025. In 1 year. This isn't just growth, it's a full-blown rocket launch. We're talking a 5-fold increase that tells you the market demand for their services isn't just growing, it's accelerating at a staggering rate.
Okay, that's a huge number. I can't argue with that. But you know as well as I do, a massive revenue figure that's fueled by a one-time market frenzy or some kind of gimmick, that's not a foundation you can build on. So where is this $16 billion actually coming from?
That's the right question to ask. And this next slide gives us the answer. The lion's share, over $15.5 billion of it, comes from one place: digital asset sales. That single line item exploded by over 500%, and that tells a really important story. It shows that BitGo is not just some sleepy, cold storage warehouse where institutions park their crypto and forget about it. No, this is a trading powerhouse. It means their clients are active, their trading desks are humming with massive institutional volume. These clients are deeply integrated and using the platform day in and day out. But, and this is important, for me, this next number is the real bedrock of the company. The trading revenue is exciting, it's the sizzle, but the subscriptions and services revenue, that's the stake. Look at this, a 57% jump year over year. This is the high-quality, recurring, predictable revenue that long-term investors drool over. It's sticky. It tells you that clients aren't just dropping in for a few trades, they are signing long-term contracts for core, essential services. This is the structural steel that supports the entire operation. And here is the ultimate proof. Why is all this revenue pouring in? Because as this slide shows in plain black and white, they more than doubled their institutional client count in a single year. This is the key. It's not just their existing clients doing more business, which would be good. This is a full-on land grab. They are actively going out and winning the market, onboarding thousands of new institutional players. The bull case is simple. It's powerful, and it's backed by the data. They are winning across the board. Bottom line, they're dominating. Simple as that.
All right. You've painted a beautiful, rosy picture of this unstoppable growth machine. But a rocket ship with a cracked hull isn't a rocket ship for long. It's just a very expensive firework that's about to blow up. That massive revenue growth you're so excited about is, in my view, papering over some very serious structural problems. So now let's talk about the bear case. It's time to put on the hard hat and go inspect the cracks in BitGo's foundation, because from where I'm standing, I'm seeing some pretty scary fault lines.
And here's the best part. You don't have to dig for this stuff. You don't need a forensic accountant. They tell you themselves, right in their own press release. This quote says it all. Their swing to a net loss was, and I'm quoting here, materially driven by declines in digital asset prices. So much for being the neutral picks and shovels provider, right? Their own bottom line, the number that actually matters to shareholders, is directly chained to the price of Bitcoin because they hold it on their own balance sheet. They're not just selling the shovels anymore. They're out there digging for gold themselves. And when the price of gold drops, guess what? So does their profit.
And it actually gets worse. You were just bragging about them doubling their client count. But look at this table. It's fascinating. While they were so busy signing up all those new clients, the total value of assets held on their platform actually went down by over 9%. And look at the assets being staked, the money being put to work to generate yield. That number fell off a cliff, collapsing by over 50%. So let me get this straight. They're adding more customers, but the total amount of money those customers are trusting them with is shrinking. That is a massive red flag. It calls into question the entire quality of that client growth. Are they just signing up thousands of little guys, while the big fish, the whales, are quietly swimming out the back door?
And finally, let's just take a quick look at where the money is going. In a year where shareholders watched profits completely evaporate and the company posted a net loss, what happened? Well, the chief revenue officer walked away with a discretionary cash bonus of almost $700,000. That's nearly double his salary. So what does that tell you? To me, it says the company culture rewards growth at all costs, even when that growth completely fails to create any value for the people who actually own the company. It's a massive disconnect between executive pay and shareholder value. It stinks. Okay, I hear you. And you've laid out the risks perfectly. Balance sheet volatility, questions about asset growth quality, I'll grant you all of that. But here's the thing, your entire bear case, the whole argument that this company is fundamentally flawed, it all hangs on one number, that GAAP net loss. And you are looking at the wrong gauge. Using GAAP net income to judge a company like BitGo is like trying to measure the horsepower of a Formula One car with a ruler. It's the wrong tool for the job. To see the real power here, you have to look under the hood. You've got to go into the engine room. And the primary gauge in that engine room is something called adjusted EBITDA. Now I know, that sounds like some confusing Wall Street jargon, but it's actually really simple. Think of it like this. GAAP net income has to include the paper value of assets. So if BitGo holds Bitcoin on its books and the price drops from 50 grand to 40 grand, GAAP accounting says they have to report a $10,000 loss, even if they never sold a thing. Adjusted EBITDA is designed to strip out that kind of non-cash, mark-to-market noise. It answers one simple, powerful question. If you ignore the daily price swings of crypto for a second, is the actual core business of providing custody and trading services profitable? And is that core business getting stronger? And as this chart shows, the answer to that question is a resounding, deafening, absolute yes. While you were distracted by the net income figure getting tossed around by the crypto markets, the company's core operational engine was firing on all cylinders. Adjusted EBITDA grew from $3.2 million to $32.4 million. That is 904% growth. This is the heavy lifting. This demonstrates incredible operating leverage. It proves that the actual business, the toll booth itself, is becoming phenomenally more profitable. This, right here, is the true story of BitGo's structural integrity. And it's a story of a company built to win.
Okay, I'll give you that, I will. That adjusted EBITDA growth is a powerful number, and it's a very strong counterpoint. So you're saying the operational business is a fortress, and that gap loss is just a temporary storm raging outside the walls. Fine, I get the argument. But it's not just you and me looking at this. What about the pros? What about the people whose jobs literally depend on getting this call right? What are the professional analysts on Wall Street saying? When they look at these two completely conflicting stories, are they buying your engine room narrative, or are they seeing the same red flags that I am?
They're not just buying my story, they are all in on it. Just look at this breakdown of the analyst ratings. Out of 13 pros covering the stock, 10 of them, the overwhelming majority, rated a strong buy. You've got 3 on the fence with a hold, but the most important number on this entire slide is right there at the bottom, 0. Not a single professional analyst covering this company has a sell rating on it, despite the net loss, despite the volatility you pointed out. The pros who do this for a living are in a stampede to buy. They see the underlying operational strength.
And they're putting their money where their mouth is. They're not just whispering sweet nothings. As you can see right here, the average price target from those analysts is sitting at $15.67, which implies nearly 60% upside from where the stock is trading right now. This is as clear a signal as you can get. It tells you Wall Street is looking right past that gap net income figure you're worried about. They are focusing on the explosive client growth, that sticky recurring revenue, and most of all, that 904% growth in the real operational engine, the adjusted EBITDA. They see a company that is being fundamentally misunderstood by the market.
So, there you have it. You've heard the bull case, built on a powerful foundation of explosive operational growth and market dominance.
And you've heard the bear case, which points to some very real cracks in that foundation, from a volatile balance sheet to some really questionable client metrics.
We've stress-tested it from both sides. We've laid out all the evidence. So now it's time for the final verdict from Iron Financial. Is BitGo a golden opportunity, or is it a trap? Our verdict is this. BitGo is a company of profound and undeniable contrast. On one side, as you see on the left, the structural strengths are immense. The revenue and client growth are simply off the charts. The operational leverage, proven by that 904% EBITDA growth, is incredibly powerful. And their regulatory moat is a massive competitive advantage. This is a real business, a high-powered engine. But you have to weigh that against the fault lines, shown on the right. That direct exposure to crypto volatility through their own treasury is a huge risk, and it creates these ugly headline losses that can spook investors. And you absolutely cannot ignore the fact that assets on their platform are declining. That's a serious yellow flag. At the end of the day, their fortunes are still tethered to the chaotic, often irrational, boom and bust cycles of the broader crypto market.
And that brings us to the final, crucial question for any investor looking at BitGo. It all comes down to this. Do you believe that the powerful, profitable, and rapidly growing operational engine inside their regulatory fortress is the real story? Or do you believe that the next inevitable crypto market earthquake will be so violent that it brings the entire structure crashing down? The choice is yours. You have the blueprint now. But whatever you decide, just don't say we didn't show you where the fault lines were. Thanks for watching Iron Financial.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.